Hey everybody, and welcome to Tech Talk here at MarketStream.live. My name is Joseph Cusick from the Cusick Group, securities offered by MoneyBlock. This is where we take a little look at some technical analysis. We also partner that with some option analysis that gives us some transparency, what has been going on with the market and what is implied or forecasted to potentially happen in the market. So the markets we want to focus on today are going to be the commodity markets and the fixed income markets. Crude. That's all you got to say. Unbelievable move. Down $2.86 today. As a matter of fact, if we can take a look at the chart, you will see right now that the crude contract at this juncture just fell off the face of the earth today. Down $2.86 at 50.28. It is holding that $50 level right now. That is going to be a critical support level that you're going to want to see held. That also is going back, and if you look at the July time frame, the last time that we saw oil down here was in July of 2015, this area right here. If it breaks, as a matter of fact, I'm going to go in here and change this real quick. Get this out of percentage. If you actually see that it gets below this level here, you're going to start to see that 44 level challenged in crude. A break of 50 means that we're going to get down in this area, which is right now it's trading below its 200-day moving average, its 50-day moving average, and its 20-day moving average. Technically, is very broken. And you also can see that the yellow line is USO. USO is basically trading right now at $11 and let me just check this. It's trading right now at $10.68, down considerably today as well. And as a matter of fact, this is where I use the options, kind of get a perspective and transparency, because the crude options right now, if you take a look at the April options, they're pricing in for basically the next 8 trading days in the crude contract, still a $2 range, either up or down. So we could see a challenge of 48, or we could see basically a resumption of the uptrend and trying to get back above the 200-day moving average at $52 and then above the 53.50 level, which would get you above the 50-day moving average. But the bears have taken control there. In USO, if you want to look at what they're pricing in, take a look at the weeklies. These expire at the end of this week. And if you take the offers of the at the money straddle and then the first strike out of the money strangle. What straddle strangles basically is the straddle is the closest strike priced options to where the stock is trading. And then the strangle is the first strikes out of the money. Okay, versus where the stock is trading. Stock's trading at basically $10.70, so I'm going to use the $11 as the at the money. So you take 35, you add it to the first strike out of the money put, that's the 10.5 puts, that's 7 cents. The at the money call is at, it's out of the money, but it's close enough, at 3 cents, and the 11.5 call at a penny. You add up all of these, basically that's getting you close to 50 cents. Pricing in basically a 25 to 30 cent move for the next 2 days in USO. We have a $2 move being priced in the crude contract for the next 8 days. And USO going into next week is pricing in the potential right now of trading right around in a 49 cent range. So you could see it get back above 11, or it's going to continue to fall down and it could get as low as 10.20. And again, that would be some levels that we haven't seen in quite a long time in oil. It's been in a bullish trend. Another commodity that we want to take a look at is going to be gold. Taking a look at the gold futures contract. As a matter of fact, I'm going to bring up, let's just take a look at the April futures contract. And I'm going to zoom in a little bit. Okay. And you can see today the action right now in gold, and I apologize, let me just take this off right now. Okay, you can see the action in gold right now, trading down $6.07 on the April contract. Broke through the 2050 and has been below its 200-day moving average in a bearish trend for the last few sessions. But I really wanted to take a look at this. With this increased pressure in the commodity space, the strength in the dollar, it's understandable why this is down. But if there is uncertainty that pops into this marketplace, this could turn on a dime. And I want to watch this very closely. The range stayed relatively tight. Came down and is finishing the day off of its lows at $1,206.40. And it's off of its highs of $12.18 at $12.09 right now. But I want to watch this very closely. If uncertainty does continue in the marketplace, gold could actually get a slight bid. Now, yes, the dollar strength is not helping it, but right now the GC contract over the next basically around 16 trading days is pricing in, the options are pricing in the potential of about a $29 range in the gold contract, in the April contract. So you could see it get up and challenge that basically almost 1240 level, or it could continue and potentially break that 1200 level, which would be bearish for gold. But I want to keep an eye on that, because one area that you utilize as a canary in the coal mine, so to speak, are the miners. And I'll look at GDXJ. These are the junior gold miner ETF. And taking a look at this, we're actually seeing that the miners are moving to the upside ever so slightly. Yeah, we had it down 26 cents, but it's well off of its lows, and it bounced off quite nicely today. And yes, it is in a bearish trend, right? And that is very obvious. But seeing this price action here in the hold of the $33 mark, this is where if the miners start to catch a bid, especially in front of maybe a safety trade or fear of the fact that while we'll have inflation, we may not have the growth components, because we have seen lower than expected GDPs that have been coming out as of late. And there is some potential concern with that. Plus, with interest rates looking like they're going to be moved next week by the FOMC, this could put some pressure on the market, because the market may be seeing some mixed signals. That could get gold, especially if you see the U.S. dollar start to pull back. GDXJ is actually pricing in over the next 2 days a $1.20 move, and over the next 10 days, roughly, or 9 days, roughly around a $2.34 move if you take a look at the option, either up or down. So you're seeing a decent range in there. Finally, we want to take a look at the bonds. And if you take a look at the bond ETF TLT, now this ETF basically consolidates the 30-year and the 10-year bond. Those are the longer duration bonds. Those bonds right now are pricing in for the 30-year a $2 range going into expiration for that futures contract, which is in roughly 2 weeks. You're also seeing the 10-year pricing in about $1.07. Basically in the 10-year. The TLT contract is pricing in for the next 2 days. Basically right now being down 67 cents. It's still pricing in over the next 2 days, roughly about a $1.10 move in this ETF for the next 2 days. So that gets me to the end of the week. But it finished stronger, and it continues to finish the day stronger than how it had started. You're seeing that right now. Currently, if I pull this up a little bit, you can see it a little bit better. You can see that the price action is coming well off of its lows of the day of 117.23. High is 117.95. We're seeing a bit of a recovery coming into the close on the price action in bonds. If that continues, you could see that the yields are going to come off. That could put some pressure on financials too, so keep an eye on that. All right, folks, that is it right now for Tech Talk, where we marry technical analysis with some option analysis to give you that transparency. We will be back here at MarketStream.live at 4:30 Eastern Time. We will be wrapping up all of today's action, so join us then.